Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Thursday, February 27th, 2020. So the markets got absolutely slaughtered again. Actually, out of all the days, this is one of the worst weeks I can remember, all the way going back to the financial crisis. Honestly, this is one of the worst weeks we've seen in many, many, many years. So, a lot of it's being blamed on the coronavirus, this and that. To me, it has more to do with how they got here. And, it had to do with, just really a whole lot of fluff and the Fed cutting rates, and it was gap ups to when we finally got a turn. There's no bids in this market, and we today, in the morning I said I was going to do that Hail Mary long trade, and I said it wasn't for everybody. And really my thought process was, we had the 200-day moving average at 30.78. I knew we were going to open a little bit below that, and was the support area, right in this 30.30. So when we went below it, it's one of the reasons why I place a stop. But from that, we actually got a really nice rally off of that. We went from the 30.09 all the way up to 30.94. So I'd mentioned where you could see 100-point move. That was it. But once we got into where it looked like we were going to close this gap, and this was one of the target areas that I was looking at. The bid just collapsed again, and from there, we took out this support, and now really we're looking at the 29.50 as support. But the way that you really, for right now, it has to, the long trades, we can take those, but you have to be very careful and realize that they're just going to be trades. They're not going to be something that you hold on to. And I do believe we're going to get a different type of rally than we saw today. This little short squeeze, we're going to get one that actually sticks. Where we're going to have to wait and see on that, because like I said, there's just no bid in this market. And really, I'm going to here's the daily chart. So we have some support that's right at the 29.26, so that's still 50 points below this, but we're still in this support zone, from the 30.33. All this is actual support. Now everything up here, these were just gap ups. So when you have gap ups, there's no volume support, and when there's no volume support, there's no bid underneath here, and that's why we're getting this massive move. So we're at the 38% retracement was 29.29. We went a little bit below that right now. We have to see how the bulls react to things, because if they lose this, then really the next spot that I'm looking at is probably going to be all the way down at the coming somewhere down into this 29.32 level. So we are in some support areas. So from here, where it was gap up, there was no volume. They took that out like it was nothing, and now we're in actual support levels. So I'll stick with, I would be careful shorting, but just because what we saw today with that 95-point reversal, we can see that, but it could stick, where we actually see almost a 200 or 300-point reversal, and we're still going to be 200 points under the highs. Now this is a weekly chart, and the reason why I'm showing it is, notice this big bearish wedge that's been in place, and this trend line has held the market going all the way back to 2009. And you can see it's been tested every year, now and then. It usually it breaks above it, and we're way above this right now. But notice that this is coming in right around where the 200-week moving average is. So we can look at this and say 26 is a possible downside target. Now again, I believe that we're going to get some type of bounce that will come through, most likely come up and test the either most likely the 50-day moving average, or someplace into this 3200 level, and then from there go back down. But we're in this support, so again, I'd be a little bit cautious. Now We had some bullish divergences. Today's big move wiped that out. But again, this is, this is support right in this level here where you have it going. We went through this 30 level, but it goes, all the way down to this, we have it going from the 2950 all the way down to the 2873. So this is area where I wouldn't be, again, aggressive shorting. And as I said, it could work. And even though I've been saying to, be cautious with new short positions, and honestly, I mean, the smartest thing you could have done was just shorted everything. But you stand that risk of the type of rallies that happen off of these big moves where this one went from 28.14 all the way up to 29.42 in a matter of one day. Now this was after the S&P just went from 30.23 down to 28.27. So this wasn't even that big of a move. So that's why I'm saying, we most likely at some point we're going to see whether it be the Fed come in and step in and say that they're going to lower rates to accommodate things, whatever it is that's going to get it. We're going to probably get some kind of jolt to the upside. And again, I wouldn't be surprised to see us trading someplace back up here. But the safe trade is to, just manage whatever short positions you had and wait for the bounce to short. Now, again, I'm not, I don't mind looking at areas for a long trade just here and there because, as we saw today, you can get these 90-point moves to the upside, but the thing is, it all depends on what kind of trader you are. If you're looking to hang on to something, for 2 or 3 weeks, stay out of the long side. Wait for, some kind of rally, and then from there, that's where you short it and hold on to it. So we don't really have any bullish divergences anymore on the 60-minute chart. But as crazy as this is, we still have them on the 15-minute chart. So something's telling me at some point, I think we're going to get some kind of rally up to here, and whether it be coming to close the gap at 31.18, we also have a gap up here at 33.26. So at some point, I do believe these get filled. It may not happen for a while, but right now, I'll stick with be careful shorting because you can get short and end up watching them put a massive short squeeze on. But just remember, if you take long trades, to use them just as a trade because we saw what happened. It was here we had a 90-point move, and then from there dropped another 100 points down from these highs here. So be careful if you do have any kind of if you take a long position, use it as a trade and just understand that that's it. It's just a trade. So here we're just looking at, we have this 2950 is the next really say major support. That's only we're looking at 20 points below here. So this would be areas I would look, and if you're going to look for a stab on the long side, it would be anywhere between the 2950 and the 2870 area, and really the targets would be probably someplace up into this area here before we see the next leg down. And like I said, target most likely is going to be down at this 2670 area if they can continue with this pressure on the downside. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.